Good morning. It's Thursday, April 29th. I'm Kenny Polcari, and this is Host of the Party, Morning Market Commentary. Everything you need to know to get your day started and understand what's happening in the markets. So what happened yesterday? Jay Powell comes out after the two-day Fed meeting, takes to the podium and holds the line, telling everybody not to worry. He's remaining accommodative. Rates aren't going anywhere. Inflation's under control. Turn around, go back to bed. It's no worries. After the bell last night, Apple and Facebook come out and they blow the roof off the house. Biden addresses the nation last night in what is being seen as a very successful speech from one side of the media, while Tim Scott's rebuttal speech is being very good from the other side of the media. In any event, Joe Biden came out and said inaction is not an option. The dollar breaks down. We talked about that. The 10-year Treasury ticked up to 1.61%, currently trading up at 1.65%. Oil just kissing $65 a barrel, a range that we've been talking about, $60 to $65. If the dollar continues to weaken, though, we could see upward pressure on commodities, and then we could see oil even attempting to test and kiss $70 a barrel, which is going to cause gasoline prices to rise at the pump just as we begin the summer driving season. And today, just in honor of Apple, for the recipe today, we're going to try the apple pie with vanilla ice cream because that's always a fan favorite. How can you be American and not love apple pie and ice cream? But listen, let's start like this. Stocks were mixed yesterday. All day long, kind of going into that 2 p.m. hour, stocks were trading very tight, right? Slightly up, slightly down. There wasn't a big move in either direction as the tension built, right? And the market waited for Jay Powell to take to the podium. What would he say? Would he use the word taper or paper or anything that sounded like taper in the speech? And what would that mean for stocks and investors and algorithms if he did? In fact, he didn't. He came out, he took complete control, and he put the boogeyman to bed. Once again, reiterating the same narrative. Like I said, he's not going anywhere. The Fed's not going anywhere. He made these statements that were very clear that while inflation will spike higher, and we know this, the rise in inflation pressures are likely to be temporary, which he said. One-time patterns is how he classified it yesterday, partly because those very low inflation readings from last March and last April, which are part of the equation, are now going to fall off. So those low readings are going to fall off, and so therefore the readings will then start to get higher, which will mean the overall CPI will see a jump, but he thinks it's going to be temporary, right? And he made that point again. And he also made the point that the Fed does not need to get all the way to its goals to begin tapering asset purchases, but clarified it by saying, we are a long way away from anywhere near doing that, so therefore I'm putting that boogeyman to bed as well. We are not beginning the taper conversation. We're not even having it. We're not even talking about it, thinking about it, so I'm putting that to bed. So the elephant in the room is just that, an elephant in the room that nobody wants to talk about, but one way or the other. And the last thing he said, which I thought was very interesting, was that some of the things in the equity markets do reflect some froth, right? But the Fed takes a broad perspective on financial stability, and here's where I think they're missing the boat, because how do you define froth? Right? How do they define it? How do I define it? How do you define it? Because everywhere I look, I'm seeing froth everywhere, right? I see froth in stocks. I see froth in the housing market. I see froth in prices, right? As prices of everyday items just continue to go up. To me, that feels, well, it feels like inflation, but you could say it feels frothy, right? By the closing bell, though, the Dow lost 165 points. The S&P gave up 4. The NASDAQ fell 39 points and the Russell gave up a couple of points. Essentially nothing. After all that, we essentially got nothing, which I was a little bit surprised at, because after the Fed came out with the statements, I would have thought the market would have rallied. But I think people were dissecting it, they were digesting it, they were trying to understand, they were looking for anything in there that may have suggested that it is different than what he actually said, which in fact it was not, right? And then what happened? And then after the bell last night, we got Apple and Facebook. And what did they do? They continued to tell the earnings story. They blew the roof off the house. But is anyone really surprised? Did anyone expect that Apple was going to disappoint? Did anyone expect Facebook was going to disappoint? I mean, look, Apple beat on every metric, right? Let's just talk about this. They reported $1.40 versus 49 cents. That was a 41% increase over the estimate. Total revenues up 54%. Revenues across every line. iPads, iMacs, iPhones, and other service revenues exploded higher. Gross margins at 42.5%. That's up from 39.8%. And they announced a $90 billion stock buyback, once again sending Bernie Sanders spinning in his hammock and Lizzie Warren running into walls, not understanding how could this be possible in a capitalist society that companies like this make money. This morning, that stock is quoted up $4 at 137, and then Facebook came right up behind them. And what did they do? They beat on every metric as well. And by the way, Facebook is monetizing every single one of you, right? On Facebook, on Instagram, and WhatsApp. They are monetizing you on everything. Kabish? They beat on the bottom and top lines as well. Ad revenues continue to increase. Average daily users and monthly daily users are expected to decrease a little bit, but they're not worried about that as ad sales are up 46%, earnings up 93%, revenues of $26.2 billion in the quarter versus the $23.7 expected. Facebook is quoted up $21 at $328 a share. And as a result, this morning, U.S. futures are in fact surging, right? Almost having to have waited for this confirmation, which I would ask, did you really need to wait? Did you really think that Apple and Facebook weren't gonna surprise to the upside, especially after what Jay Powell said yesterday, keeping everything the same and not even discussing the word taper and making everyone understand that they're going to stick around for a while? One way or the other, Dow futures are up 115, S&Ps are up 26. We're going to slice right through 4,200 like a hot knife through butter. Thank you, Barbara Streisand. The Nasdaq's ahead by 140 points, and the Russell is up 12, right? And tonight, after the bell, today we're going to get a bunch of reports. 11% of the S&P 500 is going to report today. That's more than 50 names. Caterpillar, Western Digital, U.S. Steel, Amazon, McDonald's, Merck, Comcast, Twitter, all going to report, although the big one tonight is going to be Amazon after the bell. For sure, it's going to be Amazon, and all eyes are clearly focused on what's going to happen with Amazon. Now, look, is anyone expecting Amazon to disappoint? Do you really think, after all this, after everything we've seen, that Amazon is going to be the one to come out and say, oh, we missed our estimates, or we didn't grow our revenues, or all these different services that we provide that run the world didn't beat every metric out there? Come on, who's kidding who? Look, Amazon's up 11% year to date, right? We're $100 below its September high of $35.52, which, by the way, it's probably going to pierce today during the day if the mood stays the same, if the excitement stays the same. But if it certainly doesn't, I'm sure it's going to pierce it tonight after they come out with their earnings. I already told you all the earnings coming out today. The eco data today is typically what it is. Initial jobless claims expected to be 540,000, which continues to move lower, and that's bullish. Continuing claims of 3.59 million, which is right around where it's been, 3.6. So that hasn't really moved anywhere. So we continue to watch that. We're going to get the first release of first quarter GDP. The expectation is up 6.6%. That shouldn't be a surprise because we've been talking about it. Everybody's expecting that number. The surprise will be if it misses it by any significant margin, or if it beats it by any significant margin. That will certainly be the surprise, whether it's upside surprise or downside surprise. I don't suspect it's going to surprise at all. I suspect it's going to be right where it is. And finally, there's pending home sales expected to be up 4.4% month over month. European markets are all higher this morning as they are also celebrating what Jay Powell had to say yesterday. And why? Because if you remember, Christine Lagarde, who's the ECB, European Central Bank president, came out last week and said that the ECB is remaining on hold, policy remains the same, and the ECB is not going to move until the United States Federal Reserve moves. So until the Fed makes a move, the ECB is going to fall right in line, which means, if we believe Jay, the Fed's not moving until 2024, so the European Central Bank is not moving until 2024, and therefore that's sending markets on a tear again. Plus, there were good earnings reports, just like there are over here, so that continues to support that move. The dollar Just like I said, for the last couple of days, I've been telling you how the dollar's been holding on to the trend line, but it was waiting until yesterday's Fed report to figure out whether it was going to break down or surge higher. In fact, it broke down because when Jay Powell said that rates aren't going anywhere, they're keeping rates at zero, and they remain accommodative, that puts pressure on the dollar, and we saw the dollar break through the trend line, trading from 91.04 down to 90.60, 90.69 is where it's trading today. And we could look for probably further weakness to take it down to the 89.90 level. And oil is doing what? Yup, that's up again. And why? Part of that is the dollar weakness, because remember, commodities are priced in dollars. So as the dollar gets weakened, commodity prices go up. So commodities include oil, lumber, wheat, soybeans, corn, pork, cattle, anything that's priced in dollars, as the dollar gets weak, will go up in price. And so therefore, as the dollar gets weaker, you can expect to see even more upward pressure on prices, and certainly on oil prices. Besides, the recovery story is alive and well. Period. The end. There's nothing else to say. We're starting the summer driving season. Demand is going to surge, especially as the U.S. continues to open up, and then countries around the world continue to open up. Demand is going to surge, right? There's nothing else to that story, right? And so we're kissing 65, which was that range I had identified. But if the dollar gets weaker and the demand story continues to be what it is, expect WTI to trade at $70 a barrel at some time this summer, and that's going to send gasoline prices higher. The S&P closed last night at 4183. It did pierce 4200 only for a quick second yesterday, and then closed once again below it as it digested all the Fed news and trying to understand what it really meant, right? But this morning, we heard from Joe Biden last night. Everybody saw his speech, and if you didn't see it, by now you've heard it. He's getting rave reviews from some people in the mainstream media talking about how wonderful the speech was and how together he is, and it's a solid plan and it's all good. Meanwhile, Tim Scott's rebuttal, the GOP rebuttal, is also getting rave reviews from other sides of the media as he points out some of the flaws that the Republicans think are in this plan. But one way or the other, Joey's comment that while he's amenable to compromise, inaction is simply not an option, which gives me the sense that the Democrats have decided, with or without any bipartisan support, that they are moving forward. So the $2.8 trillion and the $1.8 trillion packages that they proposed and put out there are probably going to happen. Now, there might be small little adjustments, but don't expect any big move off of those numbers. And it's all going to be paid for by these huge tax increases, which haven't been finalized yet, but here's my guess, right? I suspect that capital gains is going to go to 28%, but then when you add in the Obama penalty, it'll put it over to 32%. And the personal federal rates, I think they'll take out the 33 and 35% rates, so it'll jump from 28% to 39.5%. This way the net has gotten bigger and they drag more people in to tax people at higher rates. But we'll see how that goes over the next couple of months, because it's something that I'm sure they're going to want to do relatively soon, right? Sooner rather than later. Do I suspect it'll be retroactive? No. Could they be? Capital gains certainly could be. I doubt that they'd make personal income taxes retroactive. That would probably come back and bite them in the ass. But one way or the other, you remember the broad channel for the S&P I identified as 3960, 4400, 4200, which did represent resistance for a while, now appears that we're going right through that today. Which only means that the market's going to focus on all the positives. They're going to eliminate anything negative. They're just going to look at the positives as the market will attempt to go higher. Look, you can text the word invest to 21,000 on your phone. You can get my digital business card. Feel free to download it. Feel free to reach out to me. You can call me. You can send me an email. I'm happy to talk to you about this or about anything else that I can do for you. So what's today's recipe? Well, Apple came out last night and blew the doors off the place. So what better to do than feature apple pie and ice cream? Because you know why? You got to have dessert. And what's better than apple pie? It's simple to make. Anybody can do it. And when it comes out of the oven, nice and warm, and you put some vanilla ice cream on it and serve it, is nothing better. It's a perfect weekend dessert. You're going to have company over. You toss this in the oven. You make it very quickly. So here's what you need. Make it very simple. If you're not going to make your own dough, just go out and buy the Pillsbury dough. You can either buy the one that's already frozen, or you can buy the one you buy in the refrigerated section that's just rolled up, right? So get the doughs out. So you need the dough. You need all-purpose flour. You need Granny Smith apples that you're going to peel and core and slice. You need a cup of sugar. You need a little bit more sugar for the top. You need lemon zest and the juice of a whole lemon. You need cinnamon, nutmeg, butter, and 1 egg, right? Preheat your oven to 375 degrees. Lay out unroll one of the doughs, lay it out, butter the pie dish, and then lay the dough inside that pie dish. Now, you're going to take all the other ingredients. You're going to take the apples, mix the apples, the sugar, the lemon zest, the juice, the spices, and the flour. Mix that all together in a bowl so that it's all nicely coated, right? Toss it well, and then take that whole mixture and pour it inside the dough in your pie pan, right? Just make sure that it's not really lumpy. Kind of spread it out, make it flat so you don't get really lumpy. Take the other rolled up dough that you got, unroll it, put a little bit of flour on it, and then put it on top of the dough. Use your fingers and go around and pinch the edges all around. Just so it looks nice, right? Because you always want it to look nice. Take your little knife, put a couple of slits in the top, take a beaten egg, brush the top of the dough with the beaten egg, and then take the extra sugar and sprinkle it on top, the extra sugar. Put it in the oven, right? You've heated up your oven to 375 degrees, like I said. Put this in the oven in the center rack. Leave it there for about 45 minutes, depending on your oven. You have to look at it. You want a nice golden tone to the pie. You know what it is. I don't have to tell you. You know what a good pie looks like. Cook it until you're ready, till it has that nice golden tone. Take it out, give it some time to just cool down. You don't want to slice it right away when it's hot because it'll go all over the place. Let it cool just a little bit, and then get ready to serve it with your favorite ice cream. I always like vanilla because it's a classic American dish, right? Apple pie and vanilla ice cream. It doesn't get any better than that. Look, enjoy your day. Take good care. I'll see you tomorrow.